Okay. So with Apple, I think that they're gonna do pretty well with their earnings because they've been selling out of everything, their iPads, their minis, their MacBooks, and even their desktop monitor PCs or whatever you want to call them. And due to uh, COVID being an issue, people need to work from home, and this enables them to do that pretty seamlessly. As far as Apple goes, there's apps to download where it makes it very easy for them, for anyone really, to um, join a Zoom session or something, for example. So I think they're going to have pretty good ER, but it could be wrong, right? So we'll see what happens.
Yeah, thank you.
You're welcome. Okay, who else has questions?
I don't have a question regarding chart or anything like that. I just joined the group today, and I was wondering these alerts. Are they posted like a minute or two before the setup happens, or are they posted like right at the time where entry is happening?
I think that they're pretty much posted as soon as somebody sees something. They'll probably try to get into the play at that same time, so they'll probably get into the play and post it, or vice versa. I think it's pretty quick, especially if it's scalps, like with Tilio. He's going to get into it and then he's going to send out his alert. And there's probably a good 20 or 30-second delay in between that. I'm not sure how quickly he's able to get that through, but I mean, I would say that's kind of an average number. He might be able to get it through in 10 seconds. I don't really know for sure. But, you know, I would say that if you're going to follow the alerts, you got to be quick. Have your platform already set up. If Tilio gives out a watch list prior to the trading day, go ahead and get all those tickers set up on your screen, and draw out those support levels and resistance levels that he gives out, targets and that kind of thing. That way you know that if you see something cross over that, um, he's probably going to alert on that. So there's ways to prepare yourself, and I think that's probably one of the better ways to do it. Familiarize yourself with what the particular analyst is trading, especially if they give uh, a list, a watch list prior to the start of the day.
Got you. Thank you.
You're welcome. Okay. Who else?
Hey, Astor.
Hey,
How's it going, man?
pretty good.
Um, hey, on spreads, how's the money made? Like, for example, that Amazon spread, that Tilio jumped in. I think it was like last week or something. How was profit made on that?
So you're talking in particular about the debit spreads, right?
Yep, exactly.
So the debit spread requires some theta to decay. As theta starts decaying, the price of the stock has to go in the direction that you chose it to go. So in this scenario, it was a bullish play. I was expecting Amazon to go up in price. He also needed theta to decay. So once theta has decayed, I'd say about 10 to 15% of that contract, then you want to see the stock price pump. Once it pumps, that's when you're going to start seeing some profits. So without theta decaying, so let's say you get into it today, it pumps, you're not going to see a lot of profit because theta hasn't decayed. So profit does a sort of type of a pivot as time goes. So the stock price has to basically move with that short strike upwards, which is the break even. So the break even moves towards uh, the the other end of that, right? So you get a short and a long strike. The short strike every day with theta decay so slowly moves up towards that long strike in this bullish scenario. But theta as well, it starts to it goes kind of a linear fashion to more of a vertical fashion, right? So it goes horizontally starting out, and as time goes by or as theta decays, it starts to become more vertical. And this is when you want the stock price to start pumping pretty hard. And then at that point, you're going to see the profits. So it's similar to a call in a way, a naked call, buying a naked call. But naked calls, you don't want theta to happen. Whereas a debit spread, you need it to happen some so that theta line starts to kind of become more vertical. And that's where your profit's at.
So you basically you're hoping it kind of pumps towards the end, closer to expiration more than anything.
No, I
Is that
wouldn't say
right?
that.
Oh,
I would
okay.
say 20% to 30% days in the contract. So, for example, just to make math easy, you buy a 10-day expiration contract. By 8 days left or 7 days left, that's when you want to see it start to pump.
Okay.
You
So it's
don't.
a more of definitely a swing for sure.
Yes, definitely. Debit spreads are definitely swing trades.
Cool. Makes sense. Thank you.
You're welcome. Okay. Who else has questions?
What are your thoughts on the market reacting to stimulus news? Because like obviously last week nothing happened, but SPY didn't tank, nothing bad happened. So do you think it's just like it's become desensitized or anything?
Well, I think the negative impact on the stimulus is priced in now. If the stimulus passes, or if they start saying, yeah, we're probably going to get this passed and there's going to be a vote on it and we may start to see this thing go through to the president's desk, then I would say most definitely the market's going to react in a positive fashion. I think that there's going to be a run up for sure. And then once it gets passed, and there might be kind of a plateau period. And then, so let's say, for example, this week it gets passed and there's a run up, everything pumps a good 10 to 15%, like the whole entire market. Then it's going to plateau until the elections. And then after the elections, you're probably going to see it start to go vertical some more towards the upside. I don't think it really matters specifically who gets in there, although there are going to be some particular stocks that benefit greatly from this. EVs, for example, should pump pretty hard if Biden gets in there. I think maybe short-term oil stocks and natural gas stocks are going to do really well for Trump. But that's not to say that long-term with Biden in there, natural gas and oil should start, turning positive because, that boils down to supply and demand, right? I mean, if Biden shuts down all these oil and gas industries and these plants and coal and everything, and then we start importing energy again, that's going to make the prices rise, and that's going to make these oil businesses, for example, see more profits, right? Because the price of oil is going up. So, keep that in mind as well.
I was just thinking about that last week during the debate. I think it was when Trump said that if you vote for me, the stocks are going to go up, but if you vote for Biden, the stocks are going to go down. But in my head, I was just thinking, like, yeah, that could happen, but I feel like things would just kind of restructure as people find different opportunities in the market.
Well, I think there's going to definitely be some things that get priced into whoever gets into office, and I wouldn't say the whole entire market's going to go negative, but you'll definitely see some stuff if Biden gets in there because it's just the market's reaction to a new president. But if you get Trump in there, then you're going to start seeing the market do something where it already knows what it's going to get with Trump.
Yeah, that's what I was saying. Yeah, like people just like it'll just find different opportunities where it sees fit.
Right. Okay. So I got another question from someone that's asking, or I guess kind of a comment and a question. We're going to hear reports of GDP growth rate as well as jobless claims, pending home sales, etc. I'm not sure it will be good news. Will this deeply and negatively affect the market? Um, this will affect the market. It usually does. GDP growth rate is just kind of the overall economic status, and jobs. If jobs are up or down, that's going to affect it. Pending home sales are kind of an indicator of how good or bad the economy is doing. So I definitely would say that that's going to make a difference on what the market's going to do. Now keep in mind we've got stimulus, we've got what I just went over, we've got the elections. If all three of these hit in a positive fashion, watch the market fly. That's my opinion. Okay. Who else has questions?
Can you hear me?
I can.
So I wouldn't say I'm pretty new. I've been trading for about like 6 months now, and I never really got too deep into technical analysis. But recently, I say like the last month, I've been digging really deep into it. And my question for you is, what's your favorite indicators to use for? Well, I know like different indicators are for like day trading, and then different ones are for like long term, short term, and middle term. What are your best indicators for swing trades?
So swing trading. Let's see. I just shared my screen here. If you guys want to look at my screen, so for swing trading, to draw out my chart, I don't necessarily use technical indicators.
Okay.
And when I say swing trading, I mean 30 days or 60 days, not a week. And most of the trades that I have done or used to do or currently do are option selling and shares. I don't do option buying very much, if at all. It just works better for my schedule. But um, whose mic is Jesse? Please mute your mic.
Oh, yep, sorry.
No worries. Um, I like to draw out my charting with support and resistance lines. I like to determine the trend analysis with a minimum of 180-day charting. And I've got Moderna pulled up here, and you can kind of see I've already drawn this out. I was doing a session earlier for some folks, some staff folks, that is, where I drew, your trend line and got multiple support lines here. And that's important to know. Right? If you can
Right.
do these things, you should be able to make money with shares pretty easily. As far as options, there's a few other things that you gotta kind of add in and factor, and it's going to make a difference on whether or not you're successful, basically.
Mm-hmm.
I do have standard deviation channels here, and basically what those do, if you've ever taken statistics, you might know what a bell curve is. Actually, let me check my alert channel here. I'm pretty sure I have pinned information as far as standard deviation channels. Yeah, so if you look on my standard deviation, or I'm sorry, on my alert channel, if you look on the pin section, I actually show you how to set it up on Swim and what each standard deviation channel is. And I'll go over real quick here on my chart as well. So the gray line that you see, that's going to be your fair market value or the 0 point. And the first standard deviation channels are going to be the two tan ones that are above and below that gray line. The second standard deviation channels are going to be the green ones, and the third is going to be the purple. So the first lines are basically when the stock price touches either one of those, it's got a 33% chance of going past it, right? And the green, it's got a less than 4% chance of passing it. And the purple has less than a 1% chance. So it basically shows how extreme of a level the stock price is, basically. So, and this is all mathematical and statistical analysis. This isn't like, somebody looking at a MACD, which is basically two moving averages. This is actual real data compiled through a formula, and then it gets applied to the chart. So if anybody knows anything about math, we know that this is kind of like a hard to dispute math, right? I mean, I could go through, I have a watch list or like a scanner list that shows stocks hitting these channels and bouncing. But I mean, if you look here at Moderna, it touched the second channel twice, and pretty quickly within a week or so fell to the fair market value. Right, it's done that twice. There's quite a few other stocks that potentially do the same thing. Let me see if I want to hear off my stuff. Here, matter of fact, I'll just pull up a standard deviation channel scanner list here so you guys can see exactly what I'm talking about. 60. Right, so this one is a pretty extreme level for a 60-day chart. It touched the purple line, and then now you see it fell within 1 day. It fell an entire deviation channel. And this one right here, this could be a good trade. AIG, you basically want to short it. I want to see it go backwards. A lot of them do this. The way this charting is set up, or the scanner is set up rather, it's going to show me everything that's above or below this green line. I'm sorry, above this green line. And you can see right here, further back on this particular ticker, it went over the green line, and then literally the following day it fell pretty hard, and then it just continued to fall back to the fair market value. All right, so standard deviation channels work pretty well. They're not a silver bullet though. Every stock travels in a certain range. Some are more volatile than others, whether it be small caps, mid caps, or large caps. Tesla and Apple, for example, or Amazon. I think Amazon's a really good example. Let me pull that up. It actually follows a channel. It doesn't hit really strong areas. I mean, I take that back. The 60-day chart, it touches the green and then reverses, right? I mean, you can see it plain as day here. It goes over the green and then basically goes to the other extreme end of the green, right? And then it bounces. And, I think we might potentially see, depending upon if all these good things happen in the market, the things that I talked about recently, then you'll see Amazon pump. But if we get anything negative, let's say 2 out of those 3 things aren't good, stimulus doesn't pass, and GDP and all that stuff isn't good, now you might see Amazon break through and come down to this lower level, right? This like the 2950 area. It's potentially a possibility. But if I go to the 180, you can see exactly what I mean here as far as how it follows inside of this channel, right? So fair market value and then the first deviation channel, it travels equally between it basically. So touches the bottom, at some point comes back to the middle and then hits the top. Same thing, falls to the middle, goes sideways, hits the top again, and then reverses towards the bottom, right? So if you follow a stock religiously, then you can really look at this deviation channel and know, okay, this is a good area to get in or a good area to get out. I also use price action and volume. Basically, at a support level, let's say the stock's falling, comes to a support level. What is the volume doing in relation to the price action of the stock itself? Right? Is the volume shrinking or is it growing? So let's say stock price is going down, and I look at the volume. Okay, the red is growing. Then that tells me there's a chance that it's going to breach support and keep falling. Or if the red is shrinking and I start seeing green, there's a good chance that that support level is going to be a strong support level and bounce the stock back to the upward direction. Does that answer your questions?
Yeah, nice. That's that. Is that the standard deviation? Is that one of the indicators that you can just up on any chart? Like if I go on Yahoo Finance, I could just throw up a standard deviation onto my chart.
I don't think so.
Okay.
I think I'm not sure which platforms, etc., allow this, but I know there's quite a few that don't. They don't have it.
Okay.
Thinkorswim is by far the most versatile platform out there, and I know people that use Webull and they still use Thinkorswim to do charting because it just has so much more to offer. But there is a learning curve, so if you don't know how to use it, be prepared to be confused.
Yeah. Thanks, man.
You're welcome. Okay. Who else has questions?
So, standard deviation channels you can use on Webull?
No, you cannot.
Oh, you can't.
Yeah, I was seeing people that have Webull use Thinkorswim because it's more versatile and it offers more things such as standard deviation channels. You can't get it there.
Okay, thank you.
You're welcome.
Hey, Hostile.
Hey.
Hey, so I was looking at the stream that you had earlier with Amazon. So what would be a safer way to play them? Because it seems like they could break support, or they could just go back up and then break resistance. I guess day trading, just scalping, is the safest way to play them, as opposed to swinging.
Well, yes and no. Right now, if you look at the current chart, Amazon is kind of in the middle of the range, right? So the high is 35, the low is 28, and it's right around 32. So it's literally right in the middle, right? So that's a dangerous area to be in because if you're trying to scalp it, it could go either direction, right? I would wait until it shakes out a little bit more, right? See what happens with it. I mean, scalping is a tough game. I'll be honest with you. It's really hard to scalp something, especially if it's in the middle of its range. If it's at a support level, it's much easier to scalp that because the probabilities are that it's going to be bullish in some senses, right? It's just the statistical analysis in that would be that it's going to go up. There's more of a chance it goes up than the chance of it dropping. But currently, it's right in the middle. Now, if I go to like a 30 or 60 day here, yeah, so I mean, look at that. 60 day, is it 60? Yeah, 60-day chart. It's literally at the fair market value. So, I mean, you can see exactly what I mean here. Here's the top, here's the bottom. She's right in the middle. So, tough one. If you see Amazon kind of touch this trend line, I would be looking at the price action and volume before I decide to get into that. If it's got heavy volume in the negative direction, wait for it to hit support. If it gets to support and continues with the heavy red volume, I probably wouldn't touch it until it comes down here somewhere. Right? Save yourself from losses. But other thing with Amazon is when it's got a big red day, there's a good chance that the following day is going to show some green, right? I mean, if you look at here, it's almost alternating, right? Every day, green, red, green, red. I mean, unless it's in a downtrend, a big downtrend. But even then, you've got big red and then green, red, green, red, green, red, green, red, green, red, green. I mean, you get the point, right? It kind of flip flops. In this scenario, though, you got to determine which direction is the trend. If you get the trend direction right, then you can play it very easily in scalping. So let's say the trend is up and you get a big red day. I guarantee you the following day is going to be green. Give yourself a week or two contract time frame expiration, and you should see some profits within the next few days pretty quickly. All right, so let's assume for a second that let me just remove these two ovals. Let's assume for a second that we're on this day. All right, big pump, and then the following day is red. I can almost guarantee you that the following day would be green because the trend is up. It had a big red day, and as long as you get the trend direction right, you're going to your position that you decide to get into is most likely going to be right. All right, so that's how important the trend is. Does that make sense?
It does, and I've been playing them for like a month now, and like I keep getting lucky swinging them a day before, and it's like $75, aftermarket into the next day. But then I get screwed up, doing day trades. But how do you feel about this later this week with earnings? I noticed that their projection is lower than the last quarter. Do you think that'll have an effect on them being bullish, or it's all a gamble regardless with news and earnings in general?
Let me just take a look here and see. 173 is estimated. Oh, it's not even giving me an estimated. Do you know the estimated earnings for Amazon this coming up?
Looking at Robinhood and it says 726.
Whoa. It's a pretty high bar. I mean, let's face it, Amazon, it's online sales really, and they continuously do well. I mean, I find myself buying from Amazon majority of the time, which I'm sure most other people do as well because it's just easy. Even if it costs a little bit more money, it's easy. As far as up and coming stuff, I mean, it's really hard to say. There's a lot of stuff going on in the market right now. There's a lot of things that affect it, and it's emotional stuff. There's nothing out there right now that's fundamental at all or technical. It's all emotion and speculation. If you can make it through this COVID market, you can make it through a normal one very, very easily, in my opinion. So, like I say, if you can come out of this whole year, and let's say vaccines come, and then COVID's no longer a problem, and you've made money this year, it'll be pretty easy to make money moving forward. So, I mean, I don't know if that answers your question or not.
Oh no, it does. And sorry, I have a lot of questions. This will be my last one for a while, and I'll let some other people go. But in my current position, I have about 10 grand. If you were in my position, what would you consider on playing? Like go back to, to a few $1,000 stocks, or because I was up about 30,000, and then like I said, I've done some day trades, and I didn't cut losses, and they went south. What would you do in my position with having 10 grand to play with?
Well, I would definitely stick to scalping. Learn how Tilio scalps. See why he's making the decisions that he makes. Because that's the quickest way to make money, in my opinion, is scalping. Now, You could do shares. It's a lot safer. I do shares mainly because my money's in my retirement accounts, so I'm not looking to lose any of that. I don't mind holding a position for as long as I need to, especially if it's a good company. And I just got it on the bleed side instead of the pump side, um, which is typically what I like to do. I like to get it while it's coming down and then add to the position as it falls with shares, because at some point it's going to come back. I have no doubt in my mind that it'll come back. If you can get it at a low, you get it at support, it'll come back. Even if it goes lower, just add to the position some. So if you want to be safe, do shares. And if you can make money with shares, then I'd say that's a stepping stone to options. I mean, in my opinion, I think that if people can't make money doing shares, you shouldn't be doing options. You're not going to make money. You're going to lose it. So if you've been losing money doing options, you might want to take a step back and consider doing shares and trading exactly what I've been talking about: support and resistance and trend analysis. And not even really necessarily price action. That doesn't really make a difference for 30 or 60-day trades. It does make a difference for scalping, though, 100%. So maybe try that out. Maybe give some shares a try. I mean, you're going to have to go pretty heavy on some stuff. Start out, maybe do like 2 or 3 stocks, do $1,000 a piece, and add to it when they fall. Right, and try not to get more than $5,000 to $6,000 of your total account into those positions, and then at some point, you sell them and hopefully make 100, 200, 300 bucks, and just keep doing that. Right? I mean, I've been doing that since April. I started out. So the last 5 years, I've been doing swing trading shares only. Right? In the last year, I've really been getting into credit spreads and cash puts and iron condors and iron butterflies, which are all shorting positions. And I was making some money. I was losing a little bit here and there, but the percentage of it was getting better. April, I started out with, prior to COVID, I was doing well. COVID happened and I lost about 15 to 20% of my portfolio. Luckily, I didn't have but like 15 or 20% in the market, maybe 30%. And I lost about 15% of that, or 20% of that. No, I'm sorry. Let's see. Somewhere around there, 20 to 30% I lost in those positions, which equaled out to be about 15 to 20% of my total account value. And that's why I always preach no more than 5% of your account in one position and no more than 50% of your total account. Because if the market decides to go backwards, you still have money to pull yourself back out of the hole. But the point of my story is, last year I was doing spreads and stuff like that. COVID happened. I lost money. Started doing shares again in early April. From that point until I'd say July, August, I got to 50,000 from 36. Right, so I was at 36,000. I got up to 50,000. From September until now, I'm right about 60,000, and this is all shares, right? So you can make money doing shares. And if you can do it, if you can be successful with shares, then you can potentially start looking into options, right? I mean, in my opinion, I think you should make shares as a foundational way to trade. You make money with that. You can be consistent with that. Then you can start setting aside some of those profits to do options with, to hope and basically let those be your big home runs, and let the shares be the foundation that brings you a consistent return. Does that help?
Yes, it does. Thank you.
You're welcome. All right, who else has questions?
I have a question.
Okay.
So when you're talking about getting into shares, just going off of what you were just saying, do you recommend day trading or do you prefer swinging them? Like when you were showing your charts, like buying in when it's at the low of your chart, like your standard deviation, and then kind of selling when it's kind of peaking up a little bit?
Definitely
Or do you
swinging.
recommend day? Okay.
Definitely swinging. There are rare instances where I'd get into a play or call out a play that's shares and it rips the next day. Then that particular scenario, I would most definitely say swing it or scalp it, right? So I'll use an example that I talked about just recently. I actually alerted this um, after hours. AT&T alerted somewhere right here. You see my little bubble here. If you go back to my alert channel, you can see the exact date and time that I alerted this play. But it was right around. So that if you see this red line, this is a support level that goes all the way back to COVID. So it's below COVID, the low of COVID. And I was alerting people to get in here around this circle area. And then it literally ripped right after I said that. Then the next day, market open, it ripped even higher. This would be a perfect example of saying, okay, if you got in here, you get out here. Don't hold it, right? This is a perfect example of scalping stock or shares, not swinging it, because I think at some point you might see this still kind of bounce off this support level.
Gotcha. Thank you.
You're welcome. Okay, who else?
I got another question for you.
Okay.
So, so I told you I started trading a few months ago, well, like 6 months ago. So far, I'm similar to you. I've made a lot of money from just shares. That's what I started out with, just to learn how the stock market worked. And I found that I'm very much more successful selling options.
Option
And I think that's
selling?
because, yeah, and I think that's
Okay.
because I'm not that strong at technical analysis or timing, but I find that I'm pretty decent at knowing when this, like how far up or down the stock goes. I mostly sell iron condors and butterfly, and I've had a
Okay.
lot of success. So my question is, what are your favorite selling strategies? Like, what are your most successful strategies you've done?
Credit spreads and cash puts
Okay.
and covered calls. So those are very safe comparatively speaking.
Mm-hmm.
Like I said, most of my money's in a Roth account, so I don't necessarily want to risk it, right? So a cash put is basically you're selling a put, hoping the stock price goes up. If it doesn't, you own the
Yeah.
shares if it expires in the money. So that's the kind of strategy that I use in my Roth account. I do have a margin
Mm-hmm.
account that I used to do credit spreads on. I still will occasionally, not very much actually, just because I've got a lot of money in the market and I'm kind of in margin right now. So I'm kind of shying away from that until I exit some of my share positions on my margin account. But credit spreads, I've been pretty successful. I mean, even iron condors, I've been pretty successful, and iron butterflies, I'd say 60% or so. They're a little bit more risky, just
Mm-hmm.
because you're trying to pin the price right in the middle
Yeah.
of something. It's basically a straddle without protection. Um, Spreads are the safest, but they pay the least. And you know that's kind of why I stopped doing it and went back to shares, because with a spread, I can make anywhere from $20 to $100 within 2 weeks. So I normally do 30 to 45 days out on spreads and iron condors and iron butterflies. They all pretty much have the same time frame that I like to use. And with those, I'm in the position a good 20 to 30 days. And typically I'll try to take a 25% return. I realized I can shorten the time frame and see my 10 or 15% return pretty quickly. And I started doing that, but I just thought to myself, like, it's only $10 or $20. Right? I mean, yes, that is money. Don't get me wrong, but I can make more money with shares, and there's less stress, there's less emotion, especially the fact that I'm an admin here, so I put a lot of my time into members versus the market. So I kind of transitioned back to shares just to make it easier for me not to lose money. But if I were just concentrating directly on trading, I'd probably still keep doing spreads just because, taking a 10 or 15% return, that can happen within a couple of days of getting into the position, especially if you get it at support or at resistance and it's a strong level, right? Very easy to do. And I like option selling. I don't do buying at all, very rarely, for the simple fact that, time is on my side. And
Yeah.
if the market pumps in the direction I need it to, I can get an instant 10% literally same day. I mean, I got into a Netflix credit spread. It was a call credit spread, and it tanked literally right after I got into it. So I got in at like 2:30 in the afternoon, and at 3:15 it tanked, and I had an $80 return. It was like it was actually more than 10%. I got it was like a 50% return on that. So it was like I think it was $160 premium. The collateral was like $300 or maybe 250. I don't remember, but I know that it was probably somewhere 40 to 50% return within one day. So that's kind of how I trade spreads. Like, I want to get in and out as quickly as I can with 10%. So if you position yourself to take profits sooner rather than later, you're going to turn your probabilities of success way up. So hopefully that answers your question. I'm not sure if I did or not, to be honest.
Yeah, I did. Thank you.
All right, you're welcome.
'Cause I definitely like selling more than buying, but I want to be able to be efficient at both. You know what I mean?
Right, yeah, no, I fully understand that. I mean, I think the real money is in option scalping, or I'm sorry,
Yeah,
buying and scalping. That's where the
yeah,
real
yeah.
money is.
Yeah.
The long term for me is shares is foundational, and then I
Mhm.
take a percentage of that and I do option selling, and then the percentage of profits combined, I'll take a percentage of that and do option buying with scalps.
Mhm.
Right? So I kind of tier it up, and I feel like the way these brokers have it set up, options level 0 is like cash puts, covered calls. Level 1 is naked calls and puts when you're buying. Level 2 is credit spreads, iron condors, and butterflies, and then level 3 is like straddles and strangles, right? And it should be backwards with the exception of the straddles and strangles. They should, position people to learn how to option sell first, right? Because I think
Yeah.
the risk is lower in some
Yeah.
scenarios compared to option buying because you're risking all this money when you buy something, and if it doesn't go your way, time's not on your side, and you're just going to lose. Whereas if something goes against you when you're option selling, you have all the way till expiration to get that back at some point, hopefully, and you can even roll it out for credit if you have to. So that's just kind of my opinion.
I agree with you. Yeah.
But I'm surprised if you've got 6 months of experience and you're already doing option selling. That's pretty good.
Oh, thanks, man. Yeah, I've been deep into this stuff, man. It's really like passionate. I'm really passionate about it. So
Got to be
yeah,
passionate for sure. This is
yeah,
not for
yeah,
the non-passionate.
yeah, yeah. But thanks, yo. You answered my question.
Awesome. You're welcome. Okay, who else has questions? And don't be shy, guys. If you have questions and you think they're new or noobish, or you don't want to be embarrassed, it's okay. I guarantee you there's somebody else in here with the same question. We all were new at one point. So ask the question so you can learn faster.
I have a question.
Okay.
It's about UPS and Starbucks. Like, do you think they should have like a good earnings this week coming up? Just from looking at like their chart and like seeing that it looks like they've been doing pretty well. So like what do you see on like the chart like that helps you determine like their performance?
Well, for UPS, I would look at their previous ER. So they didn't do good on this one, but this one looks like it did very well. So they doubled. It's really hard to say. I mean, they just hit a high. UPS is probably doing a lot of work because of the fact that everybody's ordering stuff. But again, it's really hard to say, right? I mean, it's hit a high. I don't like trading stuff based off of highs, right?
Yeah.
Even if I think it's going to go higher, I don't touch it. That's just me. Like, I'm not interested in buying anything at a high unless I'm shorting it.
Yeah.
Let's take a look at Starbucks. Same thing. She's at a high. Makes me nervous. Estimated. So it looks like they're just barely beating estimates, and they were negative last quarter.
So what do you look at? Like, is there like other things you look at to determine like if they're gonna like do well or not? Or do you just look at like you just compare like their earnings from the previous quarters?
Well, for something like this, I would say you got to really follow it and pay attention to it and understand its price action. Because, with stuff traveling at its highs, you're playing with fire if you're trying to get a call on that, right? It's dangerous. And if they don't do well, it's going to go completely against you. If they are not higher than their estimate, it's going to go down in this scenario. I mean, if you look at their last two earnings, they went down because it didn't do well. They barely beat their earnings and they went down. So
Okay.
I'd play that one with a lot of caution.
Okay. Yeah, that was my only question. Thanks.
Okay, you're welcome. Who else?
Also, I had a question.
Okay.
So I've been watching Twilio or eyeing Twilio for a while, past couple of weeks. And everything I've read about it, their balance sheet and everything that the company's been doing, gives me like a bullish look on going into earnings and maybe after. I just wanted to know what your take was on them, or maybe look into the chart and what you think about them.
What's the ticker?
TWLO.
Segmi tutalım. Like that.
I don't know. It's kind of a mixed bag, honestly, because it looks like this one here, it beat it by about $1.
Yeah.
I'm sorry, is it $1 or is it 10 cents?
You mind repeating the question about TWLO?
Well, let's just say this one they outperformed it some. I don't know how much I have to do some math, but I mean that's negative 40 versus 6 cents positive, so it's at 66 cents better than estimated, and then this one is 50, kind of nearly the same, but you see this one, it fell hard and this one pumped hard. So
Yeah. So I know for when it fell hard, it was based on poor guidance. But they recently they revised the guidance going into this earnings from what they had.
yeah, I mean, so
Yeah.
looking at the chart, I'm not really seeing much.
Yeah.
Yeah, there's no real
Okay.
definite information here, and without following the stock, I don't really know much about it, so it's hard for me to give you some kind of information based off of it. Sounds like you know more about it than I do.
Okay. Well, thank you so much, though,
You're
to
welcome.
looking into it. Yeah.
Okay. Who else?
So how you doing, boss?
Pretty good.
All right. So I'm a newbie here to join like last week, and before I used to shares, do share trades only, like a long-term investment, as you are like more pro at it. So I just have a advice. Like I do like $100 every month. So right now my portfolio is a decent. I have a ticker called ZYNJ Zenga. I don't know how to pronounce it, but still. So can you like give me an advice? It's around like 950 at the moment. Like if I want to invest in it for a long time, like what would you recommend?
Um, I don't like that one for long term at all, to be honest with you.
Oh, okay.
Let's see.
It's ticker ZYNGA.
It looks like it's been languishing for a while. In the last 2 years, it kind of went up.
Yeah.
Without
So
really knowing specifically what's making the stock move, I can tell you off of support where's a good entry if you really want to go long term on this. I think there's better stocks out there for long term.
okay.
Off the top of my head, it'd be hard for me to tell you specifically. I'd have to look at my watch list and really drill down and see. I mean, I don't like long term. I like to swing stuff because I believe that long term it just ties up your money and
Okay.
it'll be relatively the same return as one of my swings. Right? So, or let's say let's say you hold this position for 5 years. I can make that much money. So let's say it doubles in price. It goes from $9 to 18. I can make that much money in 1 year with swinging, if not more. I've actually done that in 4 months. So that's why I don't like long-term holds because there's so much more opportunity in the market where you can take advantage of the roller coaster rides, right? So I mean, had you got in at somewhere around 8:30, you could have swung it at 9:50 and then got back in at 9, and I bet you this will go up to probably like 9.93 to $10, and you could have swung it again. You see what I mean? So you can constantly continue to flip your money. So that's why I don't like holding shares for long periods of time. I like to move on, take my profits, move to something else that's down in the market when I took my profits on something that was up. Right? So don't tie up your money, flip your money.
Okay, gotcha. I can do that too because like I believe last Q&A you spoke about like if you start investing like say $100 a month, like within like I'm 24 years old at the moment, and after 20, 30, 40 years you will be having like stack of money like invested in shares, which is like keep growing up. So I was talking in that respect. So it's like I have to invest that in that. In I do options scalping too with Tilio. So made a couple bucks on that too, and whatever the profit is, I keep investing it in the long term.
I mean, you could do that, right? If you're recycling money with scalping and then putting it into a long-term portfolio, that's not a bad idea because you're continuously making money, right? But
Yeah,
if all you're doing is putting money into shares and then letting it sit, you're not making money, right?
yeah, I got
Your
you.
positions might be going up, but you're not actually realizing your profits. So I mean that's you could do that. I don't disagree with that approach. But what I was referencing was a Roth account where you put $6,000 in a year and you make 2.5% to 5% a month. Over the course of 10 years, you'll have $700,000+. That's with 5% a month.
Oh, what account, my bad? What account? What are you talking about right now?
A Roth account. It's a
Oh,
retirement account.
retirement account. Oh, gotcha. I'm not pretty used to that one.
Yeah, I would suggest looking into it, especially being young, because
Okay.
if you can return, and again, this is something that is long term. Like you can't trade a Roth account and then expect to take profits every year or every few years. It's 59 and a half years old is when you can start touching your money. Um, you can take contributions out for no penalty or no tax, but profits themselves you can't touch until 59 and a half. And I wouldn't recommend withdrawing any contributions because then you limit yourself to the max amount of money that you could be making. But if you contributed $6,000 a year for 10 years, made 5% return every month, you're going to see $700,000+ in your account. Right? 20 years, you're going to see about 2.5 million. So, and again, that's making 5% return every month on your total account. So, $6,000 times 5% every month. It's fairly aggressive, but it can be done. 2.5% is a lot easier to get to, right? So, it's easy to do the math. If you're making, I think the actual number is like 750,000, 5% a month, every month for 10 years, and contributing $6,000 a year. If you do 2.5%, it's going to be half that number. So whatever the half of 750,000 is, that's what you'd see in 10 years on that type of strategy. And I do this with shares. I mean, granted, look, you could target 2.5% and then this month make 15% or 10%, right? And then the next month make 2, and the next month make 6. It's not a static number, right? You're not going to just every position be like, oh, I'm gonna get out at 2.5%, right? I mean, you get into something and you should have a profit target, and when you get near that profit target, you take profit, and that could be 10%, right? So, and this number equates to so the 5% a month on your total account value. So let's say it's $6,000 currently is your total account value. If I put whatever money I put into the market, as long as I make 5% off of that money, and I end up trading $6,000 worth in that 1 month, and I made 5% off of every trade, even if it was only $500 each time. If I traded $6,000 total for the month and made 5% off of every single trade, it still equals out to 5% return on that $6,000.
Gotcha. Okay. So there comes like two strategies. If you tell me like I'm start investing, like make money on the trades, for the shares. So would you recommend? Like, do I diversify my portfolio, or do I just it will be quicker and more safer to just stick to one stock and keep adding money when it's down and take profits out when it's up? So do I just diversify my portfolio, or just stick to like couple tickers, like keep putting money in that?
Well, yes and no to both answers, or to both scenarios. Diversification is only a way to protect your money from industries failing or doing badly, but it's not going to protect you from the whole entire market doing badly. Whereas if you're into one stock, you're beholden to that industry, right? So no matter what, either strategy is not going to protect you from the entire market having a bad day. But if you diversify and some of the market's having a bad day, some of your portfolio is having a bad day. So, it's kind of how you want to look at it, right? I mean, it's like a 401k or a mutual fund or an index fund, like the SPY is a diversified ETF. But if the SPY is not doing good today, it doesn't matter how diversified that ETF is. If majority of them stocks in that SPY are doing badly, SPY is going to go down. So, and there's a ton of different industries in the SPY, right? So, kind of keep that in mind, right? I mean, if you really want to get specific on it, you could pick like the best ticker in each industry and create your own quote unquote ETF. There's no real right or wrong way of doing this. I think if you pick a really solid company and it's just one ticker or five, no more than five, you could potentially see huge gains. Right? I mean, let's say for example, you picked Apple and Tesla, and Netflix, Nvidia, AMD, at say the bottom of COVID, every one of those would have returned lots of money, right? So, and they're all relatively in the same industry. So that's not a real easy question to answer because there's no real right or wrong answer to those questions.
It's just like different approaches you guys use, like.
Yeah, I mean,
Okay.
it's based off of strategy, in my opinion. You have to pick the best strategy for yourself.
Okay, sounds good. And just one last question, and I don't want to take your time. Like other people have more questions too. So, like, like say like tomorrow or within like 2-3 days, I have like $1,000 to invest in shares. Like you alerted for AT&T, and I made like couple like small amount, but still profit is a profit. But like, would you be able to like suggest me like where should I put my like 1K in the stocks, and we'll see how it goes.
Are you talking about for long term or just swinging?
No, yeah, swinging like that's like more quicker way to make money, as you told me, compared to the long-term investing.
Um, I'd have to look to tell
Okay.
you exactly. I mean, um, I haven't been paying a lot of attention lately because I'm still kind of heavy into some positions. So I haven't really been looking for new ones. But I'd have to look at some. Let me just glance real quick at my watch list here. I think Rocket might be a good swing.
What was that? Like, I'm just
RKT. If you look at the chart here, it's at a kind of a low. Pets. Pets is kind of, I mean, it's already kind of starting to move up, I think. But if we see this fall some, if Pets goes below, say $30 or $29, it's probably a good one to get into.
Yeah.
Exxon's pretty low right now.
Okay. Which one was that?
Exxon.
Exxon. Okay.
Bank of America. No, not Bank of America. I almost alerted this one when it was down here at under 35, but I just didn't, unfortunately. Gold. So Barrick Gold. It's kind of at support right now. Warren Buffett put a lot of money into that not too long ago. Intel could be, although I think I'm in Intel right now. When I made so when it was up here at $55, I had about $120 profit, and I was hoping to see it come up here to like $59 area, and then I was going to take profit. But then it got crushed again. So this could be a good one to get into. Could be. They got to really fix the problems that they have right now. They're talking about selling some of their business to concentrate on specific parts of their business. So if they can turn it around and be a good long-term investment, but this one's at a low. Let's see. Yeah, ended at 48.11 roughly, 48.20. So I mean, we might see this start coming back up slowly. But long term, like I think Intel is going to have trouble competing with AMD. AMD is starting to really do well versus Intel. JNPR is pretty good to get in somewhere under 22 area. JNPR, I mean. Lockheed Martin's good at 360. Or no, 340. Well, under 350, I think is probably the better number. I think it's from supports at 353. So I mean, if it touches support again, this is another good one to get into. MO is another really good one. 38, under 38.
What's the ticker?
MO.
Emo. Okay.
mRNA is pretty good if you can get it 65 or less. That's it for now. I mean, silver is probably, SLV is probably okay to get into if you can get it for under $22. And again, you know, T-Mobile just had its little pop, but I think I'm not sure what's up with this. It should continue upwards. Let's see what their earnings was. Earnings wasn't even really that great. It came close to its estimated. Didn't even beat it. But I mean, AT&T is a very popular, very widely used company for many different services. I can't imagine they'd ever go out of business, at least in the next year or so. I mean, so I think, you know, it's still a good investment, but you've lost an opportunity here. Or if you're still in it, I don't know. I like to swing this type of stuff. When it pops like this, I like to just get out, take the profits, and move on. Tesla's also a decent one if you can get it for, you know, under 400, or even better at 363. I'm just not sure you're going to see that number again.
Yeah, I know, right? So when the Tesla had a split of the shares, I just invested like within like 2 to 3 days. I bought like 3 or 4 shares. But you know, after that, it had a steep downfall. I know it's good for long term. I had some, but I did average it down, so it's around like 440. But let's see for the long term. I believe it's really good. And plus, Tesla is also jumping into India, which is another big like market for Tesla. So let's see.
Yeah, I mean, the most people in the world exist in India, like the largest population. China is second.
Yeah, the richer are like richer are really rich people, and so if they get in there, and a lot of people are gonna go, so it's for sure gonna affect some kind of sales to them.
Well, not only that, Tesla's trying to come out with that $25,000 vehicle, so that's going to really appeal to a lot of people.
Yeah.
I mean, that's going to increase their market share drastically. So that's all I got for now. I mean,
I do have like now like at least 10 tickets to watch on. If I see a nice opportunity to get in, probably could get in and And if I have like any other questions like regarding the stickers, I can like always contact you. But yeah, thank you so much for your time. It like really made me clear some points on the long term as well as trading. Thank you, Hostel. I really appreciate it.
You're welcome.
I got a question, Hostel.
Okay.
So say you're projecting a stock to go up, and you want to hold a position for maybe a week or two, maybe even a few weeks. How far in the money or out of the money would you want to be going for that? I'm looking at DraftKings. Looks like they had a little doji at the close, and it's been holding support really well. So I'm looking to go long on that. I was just curious what would be like the best way to approach it. How far in the money, out of the money, at the money?
Well, I wouldn't do anything in the money if you're trying to go long on something with options. I would go at the money as close as you can based off of open interest.
Based off open interest, okay.
So where the best open interest is, which looks like 45 strike.
Okay.
Or at least for November 20th. I don't know what date you're looking at, but
probably November 20th because they have earnings coming up as well.
What's their earnings date here? 13th. Yeah, so that's a little too soon in my opinion. Like, so I don't like. I'd like to at least give it 50% of the contract time left by ER. So I'd probably go further. I'd probably go for this one here on December 18th. Same strike looks like 45.
Okay.
I think the price is just, it's another, let's see, 430. It's another $150.
Yeah.
But that gives you a lot more time, and if it pumps on ER, this is money. And the open interest is the highest on the call side for this strike.
Okay.
And if you look at the put side, there's not a lot.
Yeah, I noticed that.
So that kind of gives you another feeling that this is more bullish, right? More people think that this is bullish, rather.
Yeah, for sure.
I mean, just looking at the chart, it's definitely at a support. Let's see. Weak support. 40.42 is the support area, but I mean, I could go to the body here. 41.30. There's really nothing else supporting that area. The thing that concerns me here is what's happening right now as far as the green. It kind of happened up here too, and then tanked some more. So
yeah.
I mean, you could potentially see this thing, coming down to the $35 area.
Yeah, that's what I was also scared of too.
So I mean, I'd let this continue shaking out. Be honest with you.
Gotcha.
Let's see what the last earnings.
They beat earnings every year, I believe.
No, this one was bad. This one was negative 15, and it came out as negative 55. So that's bad.
Oh, that's terrible.
The one before that doesn't even tell me what the actual. Sometimes it doesn't tell me the actual here, but it still didn't stop it from going up, right? I mean, it looks like I would potentially, let's see, falls towards earnings, rose towards earnings. So there's no real good data on this as far as earnings goes. I would definitely wait and see if it comes down to the $35 area. If you notice a trend direction change, then you could go for that December call.
Cool. All right, appreciate it.
You're welcome.
Hey, Hostel, I got a quick one for you.
Okay.
So I'm a young investor looking at long term, and I've been picking up cheap shares in the industries of like solar, cannabis, electric vehicles, and what's the risk in investing in cheap shares? Like, is there really a chance they're going to go to zero? Is there only way to go up?
Well, you got to look at the company and how well they're doing and what their future outlook is. I mean, for those industries, I see those industries going up, but can these businesses last long enough for those industries to go up?
Yeah, and what do you look at for specifically in companies regarding that?
Fundamentals. You got to look at their fundamentals. You know, their return on profits or EPS, PE ratio, PEG ratio, management, you know, deals that they make. And you got to really get deep into their business if you're getting into something that's like, you know, cheap shares that it's not a big market. They're not part of the market in a big sense. You got to really drill down and get granular on the company.
Yeah, that's what I figured. Thank you.
You're welcome.
I have a question.
Okay.
Just generally speaking, whenever say you're buying an option, and I don't have a chart in front of me, but say the option or a stock price is close to a support level, like a strong support. When you go to buy a call, for instance, would you buy below, like close to a resistance level? If it's at a support level, a strong support, would you buy close to resistance, like underneath the resistance, or
No.
like farther?
No, not at all.
So like if say it has resistance at $45, would you buy a call for 46, or would it be better to buy one for 44?
And where would the stock price be currently?
Say it's at like $40. I'm just giving like a hypothetical. I just don't know whether or not you would want to buy, like, use the resistance as an indicator of which strike price to buy is what I'm asking.
No, I would buy at the money.
So yeah, so at the money, and then
Because
just
you want the stock price to go into the money and beyond, and your profits become exponential when you're in the money.
Okay, yeah, that makes sense. And then you would also use the open interest.
Yeah, definitely pick a strike that has good open interest. And
Okay.
I would use the resistance level as an area to get out or to close out that trade. And I would do it before it gets to resistance.
Okay, that makes more sense. So buy it in the money and then sell when it gets close to resistance. Okay.
Buy it at the money, not in the money.
Yeah, that's what I meant, at the money. I'm sorry.
No worries.
All right. Well, hey, I appreciate that.
You're
Thank
welcome.
you.
No problem. Okay, who's next?
I have a question.
All right.
So, as a fairly new investor, it's pretty easy for me to understand like buy low, sell high. But I was curious, like in your own experience, what is like a piece of information or something you learned that kind of took your investment strategies to the next level where you just really started to see profits? Like, what kind of information did you learn or strategies did you start to learn that wasn't just strictly based off of buying low and selling high?
Well, I learned that too many indicators is not a good thing. I also learned support and resistance is probably the best thing I've ever learned.
Okay.
And that's buy low, sell high. So I mean, but the thing is, it's not like the term buy or the saying buy low, sell high. It's very generalized. I mean, anybody can say, yeah, look, I want to buy low and sell high, but do those people actually know how to buy when it's low and when to sell or sell when it's high, right?
Right.
Determining that type of information on the chart, that's a different thing than just, simply saying buy low, sell high, right? So if you can actually determine when something's at a low, then you can determine when to sell it at a high. If that makes sense.
Mm-hmm. So basically, would you say like when you started doing chart analysis, like when you draw your lines with the standard deviations, is that kind of like the game changer to help you figure out when to sell or when to buy low and when the stock is going to go up or etc.?
Well, standard deviation doesn't really help me determine that. It just kind of says after I've already looked at everything, then it tells me this is the level of extreme that the stock is at based off of the time frame I'm looking at, right? So I would go ahead and look at my support and resistance and determine when to get in or where's a good level to get in and a good level to get out before I even try to get into the position. And then after I've looked at all that, then I look at potentially the standard deviation and say, all right, everything that I've looked at checks out, and this helps to confirm what I'm seeing because it's at an extreme level. If that makes sense. So let me see if I can. So I mean, this one's kind of there, right?
Are you sharing your screen or something? Or?
Oh, did I not? I thought I was sharing my screen. My bad. Must have lost it. Or it should be back up now.
Yeah, I see it now. Thank you.
So I mean, this would be, like, I've got DraftKings pulled up. As far as standard deviation, it's kind of near that second channel. And if I look further out at the 180, it's not a very extreme level just yet. But when I look at resistance points on this, it doesn't really ever get to the second channel on the top. So I would almost certainly think that the bottom would be very similar, right? So, and that's kind of where it's at here on the bottom, right? So if you look at the top, it's kind of in the same place it's at right now, maybe a little bit higher. So this tells me, as far as this particular stock, if I were following this on a religious basis, I could probably tell you which direction this is going to go. I don't follow this, so I can't tell you specifically, but that's kind of how I use standard deviation. I don't use that as an actual indicator to help me decide when to get in something. I just draw my support levels, and then if the standard deviation matches up with it, that's a confirmation. If that makes sense.
Yeah, definitely. And how do you determine your support levels? Is that mathematical or?
No, you just look at the chart and find, let's see. So this isn't as easy to show support, but resistance it is. So with resistance, this level right here is strong resistance because it does a trend reversal. Right. So if this point down here, if this starts going up and it does similar thing as this downward trend, except it goes upwards, that would be a strong support. All right. So strong support and resistance is a trend reversal. Right. And then you've got levels like right here where this is pretty good support. Right here would be okay support. Down here would be pretty strong. I could even go all the way over here. Right? See, I mean, there's levels you have to find in a stock to help you determine what's strong and what's not. And so trend reversals, the points where it reverses is strong. And then also if you have 10 or 15 points that touch that support line, that's also a strong support level or resistance level. So let's say, for example, this bottom one here, this really isn't a good stock to do it on. So I can find a better one. This one. So look how many areas cross over this line or touch this line, right? I mean, just based off of the holistic view here, I can't tell you exactly because the 4-hour candles are kind of smashed together, but looks like, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 areas that bounce off this lower line. That would make it a strong level, right? So,
Live Q&A about resistance things in that Discord, please. You watched that video I sent you where
yeah, that's another way to determine strong support.
So basically, you just draw a line like where it the stock seems to have a spike, or like
A
at its
reversal.
a reverse.
Reversals and multiple areas that touch that area.
Okay, I see. All right, thank you for that insight. Appreciate that.
You're welcome. Who else? Anybody? Anybody else have questions?
Hey, Hostile, I got a question for you.
Okay.
Have you been paying any attention to Rocket Mortgages?
Not really. Not since recently. Somebody asked me about it, and I noticed that it's at kind of a low.
They just got their earnings coming up. I was just thinking it might do a little bounce up, but
It could. But
especially
it could go
had
downwards too.
didn't they just announce that there was like the highest record of home sales last quarter or something?
I'm not sure. Like I said, I haven't been paying attention to it. I've only recently looked at it, and I can see it's at a support level right now. You see it right here?
Yeah.
I mean, you got multiple areas touching this line, and it's kind of bouncing off of it. I mean, this is a 4-hour candle, so I mean, it looks like I've got 1, 2, 3, 4, potentially 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, around 17 times that the stock price has touched this and bounced off of it. That's about the most information I'd give you on Rocket.
Gotcha. All right, I'll just keep an eye on it.
I mean, I think it's probably a decent trade to get into. Options, it's risky. Shares, not so much. Shares are a little bit, a lot less risky, rather. All right, who's next? Anybody?
I got one more for you.
Okay.
So for instance, like with a stock like Snap, I'm not sure if he's talked about it today, but if it just doesn't do what anything that it's supposed to do or what one would think it would do, is it you just kind of stay away from it until it settles out?
Ooh, my lord. Holy crap. I think ripped. I wouldn't touch that. I'd probably, let's see. I mean, it almost did 90 cents or so more than estimated. But holy crap. I mean, it's at a third deviation channel. I think the potential for that one to come down is much higher than it is to stay up there. I mean, 60-day chart, it's above the third deviation channel. The 30 is near it. I mean, all of my analysis time frames, rather, they're all near or on that third channel. I mean, look at this one. Holy smokes. So when all the time frames are relatively the same, that's an indicator that they're all pretty similar. I mean, look at this. I mean, they're all right around this area. So that tells me that as far as statistics goes, the probability of it coming down is much higher than it going further up.
Didn't you say it's like 1% to hit that third level?
1%, less than 1% chance of going past.
Oh, past it.
Yep.
Okay. I tried shortening it like 3 times last week, but didn't work.
Yeah. Sometimes you gotta let stuff play out a little bit. I mean, and if you look to short something, give yourself a lot more time. Right? I mean, like in this scenario, I would say this would be a good call credit spread. I mean, but it's only giving me $40. I don't really like that very much. 46. Yeah, I mean, this is the one thing I don't like about Snap. It doesn't pay very much. With spreads, that is. I mean, it could probably pay a lot for regular naked calls, or puts, but spread wise, it's trash. So that's why I don't even really ever look at it. I could look at January and see what that pays. It's still the same thing, 40, 60. So I mean, spread wise, I don't like it. It just doesn't pay very well. It means I'd have to sit in that position for a long time to see profits. And it might, 10% return on that's like $5. Waste of time for me.
All right, thanks.
You're welcome. All right, who else has questions? Remember, it's okay if you got noobish questions. Everybody was a noob at some point. It probably took me 6 or 7 years to stop being a noob.
I'll ask a question.
All right.
So what are your thoughts on stocks such as Carnival and Norwegian, like the cruise line stocks?
Well, I don't like Carnival. For the simple fact that if anybody goes out of business, it'll be them. They're the least solvent out of all the cruise lines. RCL or Royal Caribbean is the best. And even Royal Caribbean's having a little bit of trouble. I think it's NCL. What's Norwegian? NCLH. They're okay. They're decent. They have a partnership, honestly, with RCL. I actually swung these guys right around $14 and took some profits on them. It was a cash put, so I ended up probably making about $100 on them. But I think it was somewhere over here because I remember it going in the money and then coming back above it, and then I took the profit at that point. Made like $100. So Norwegian's not bad. A lot more affordable than RCL. but I would probably not. I just don't like CCL. Some people still trade it. Some like it, but unless you're shorting it, I don't like it. But it's weird. Seems like these days anybody that files for Chapter 11, their stock goes to the moon. So that doesn't make any sense to me.
Yeah, I'm a little deep in CCL right now just because I just have this like notion in my head that like how can these giant cruise ships ever go out of business? I don't know. I guess they can get bought out, but a part of me likes these cruise lines and airlines just thinking because they're solely down right now because of a virus, like, or is that not how I should think about the market?
Well, what you should think about is how long can they stay down? How long can they not operate at full capacity or at regular operating capacity? How long can they operate that way? And if the answer is they can operate that way for a year or two, then get into it. But if you do a fundamental analysis on it and determine that they've got 6 months left before the government needs to bail them out, I wouldn't be getting into that unless you're shorting it. But again, seems like people that file Chapter 11 these days, they go up. So I mean, it just doesn't make any sense to me. That's all. So it's risky. Let's say that. And the volatility is a lot more exponential with stuff like this.
True.
And granted, the more risk, the more reward. So there's that to factor in.
Thanks for that.
You're welcome.
Okay, Hostile.
Okay.
What percentage does the media have on you when buying and selling? Like, I've noticed how like one bad media outlet can completely turn a stock upside down.
Well, the media, as we know, usually doesn't tell the truth. So, I mean, they can affect stuff, unfortunately. And what you got to ask yourself is not what they're telling you, but what they're not telling you. Because, they're all about money, they're all about ratings, and they're all about creating hysteria and panic. They're not about telling the truth. So, again, the real question is instead of what are they telling you, it's what aren't they telling you?
Okay, so usually if you know most of your stuff, then a bad rating can be a good time to buy.
Yes, could definitely. I mean, I've seen some bad stuff come out for Tesla as far as 30,000 cars of recalls in China, which happened over the weekend, I think. That could short term be a bad thing, but long term, Tesla is on fire.
Yeah, awesome. Thank you.
You're welcome.
Hey, Hostile, I got a question for you.
Okay.
Similar to the question before the last one I wanted to get your opinion on is Hertz, on what you thought about them, because they kind of ripped after the recent news of the funding that they got and then tanked back down. Just wanted to see your thoughts on that one.
Ugh. Oh my God, it looks terrible. I don't know, man. Hertz is when they filed for Chapter 11 some time ago. I think it was over here in June, and it pumped, and then just been tanking, and then it pumped again, and I have no idea. I'd be lying to you if I told you anything about Hertz.
Right. My thought was, and similar to the other one, what the other guy said, but I just feel like Hertz is one of those companies that's like they've been around for fucking ever, and I just feel like they're at all these airports, and unless they just switch names and liquidate into something else, they're gonna hang around.
Yeah, I mean, the problem with Hertz is they got all these cars that are depreciating in value. Nobody's renting them, and at some point they're gonna have to sell them, and then when they sell them, it's gonna be for a loss. So I mean, you got to think about that, right? I mean, no matter what, they're losing money.
Right.
No
Yeah.
business in this world can stay afloat if they're losing money, except for the U.S. government. They can just
Facts.
continue to print money.
Mhm. I was just wondering, since it's so cheap right now, if it might be sensible for like a long-term play, you know, looking like 2, 3 years out after the virus, if they get back in profits, could potentially see good returns. But like you said, it's impossible to tell.
Well, if good COVID news comes out and vaccines start hitting the shelves and airlines and cruise lines start going up, Hertz should follow right behind.
Right. All right. Thanks, man.
You're welcome.
Hey, I had a question.
Okay.
How exactly does the futures market correlate to the actual day market? Because right now, the futures are pretty much down, and I've been in trades before where the futures have been up, and I'm expecting the option to gap up, but it just went like south or like another way. So could you give an explanation on that?
There is no correlation. I mean, it's just I wouldn't even look at futures and be like, oh, okay, the market's going to do this. Like, it just doesn't work that way. I mean, it's the flip of a coin, really. Sometimes futures are up, market opens up. Sometimes futures are down, market opens up. So, I mean, just like you've just said, you know, you had a position, the futures were up, market opened down, right? So, I mean, there is no way to tell how that goes. One thing that you can do, however, is look at other markets like the Asian market and the European market. Those can potentially indicate a direction. But typically the US market is what leads those. So I know that, excuse me, I know that Asia and Europe is ahead in time than the US, but the movement of the US market and all the news out of the US market affects Asia and Europe. So think of like, let's say COVID news came out today at 8 p.m. or 9 p.m. Asian and Europe markets probably are going to bounce. I would almost expect the U.S. market to do the exact same thing, if that makes sense.
Okay, thank you.
You're welcome. It's not a silver bullet, though. I like to instead let the market play out and then play the market based off of what it's already done. I like to get behind it, not in front of it. It's like a tsunami. You'd rather be behind the wave instead of in front of it.
Well put.
Make a little bit of money or lose a lot.
I had another question. Do you have any idea or analysis of Roku for this upcoming week?
Roku's another one of those wild cards. Let's see. No estimated. I'm not really sure on this one either. I mean, I might see it kind of come down. It's at a high. But I mean, it keeps hitting highs and going up. So there's that. I mean, I don't even understand how Roku's going up. Does anybody? I think I've asked this last time on the other live Q&A. Does anybody here even have Roku?
I got Roku. I got a lot of friends with Roku.
Okay. Well, there's one person.
I have Roku.
Okay, there's two. Who in here has Netflix?
Watching it in the background as we speak.
I'd say
Yeah,
majority of the people
have
here have
Netflix.
Netflix.
I like Roku because it puts everything on the same screen. All your accounts, Netflix, Hulu, cable, all your games.
It's kind of like a Fire TV, basically, right?
Yeah.
Except you can't download pirated software to watch stuff for free. Or can you?
I don't think so, no.
No, you can't.
Okay. So there's the difference between the Fire TV and Roku. Same thing, except one of them you can pirate stuff. I mean, I guess that's the only real advantage, right? Is it's got all your stuff on one screen. But as far as why it's pumping and continuing to pump, I guess those that do use it, they utilize it in a way that allows you to look at all your programs and access it. I mean, does it require a monthly fee, or you just purchase the
No month.
controller thing?
Yeah, you just buy the TV.
Okay. So I mean, maybe it's going up for that, right? But I mean, let's be honest. Um, Fire TV is the same thing, plus some. Um, my smart TV does the same thing. I can download all the apps I need. Apple
Yeah,
TV does the same thing.
I'm kind of in the lower class community, and this is like really popping off here because a lot of people can't get the Amazon Fire Prime and stuff.
How much is a Roku?
You can get a Roku TV like $150, $200.
Wow.
Yeah.
I got a Fire TV for like 25. So I'm still not kind of understanding
Yes.
why anybody would pay 150 for that when I can get a Fire TV and watch everything for free, pretty much. But you know, I don't know. I'm just trying to weigh out why Roku's going up, and the only thing that I can say is COVID. But I've always known Roku to be a very volatile stock. So even before COVID, I've known Roku to rip 10 or 15% market open and then drop 20% right afterwards. And then, you know, next market open, it does 25%. And, you know, it's just crazy like that. I've seen it do it. Let's see, who was it? Mills. I don't really have an answer for you other than the fact that it's in an uptrend, and I think it'll keep pumping some form. It might go a little bit sideways to have these standard deviation channels realign to kind of push that fair market value up some, and then once it looks like it's at a fair market value, it might start pumping again. That's kind of what it looks like it's been doing. However, we got some, I'd say majority of the time it's been below fair market value. So maybe it's time for it to do some falling. I don't know. I don't really have an answer for you on that, unfortunately.
Okay. Thank you.
You're welcome. All right, who else has questions?
Hustle. I just want your opinion on this. Is not a very popular company. The ticker is ICD. It's an oil and gas drilling company. It's around it's penny stock, around about 250 at the moment. Back when COVID started, I made easy 100 to 150 trading it. Now it's around 250, and the stock is really volatile because is now at 250, and like in another month it will be like $12, and then it comes back to 120, $1. So I just want like if you can watch the ticker and tell me, because I have now at the moment like I'm really having the equity. I'm like just like being really patient for another jump in. So I just want like advice from you. Should I just like stick to it or just take on my equity because it's like really volatile at the moment?
Well, if you're looking to trade this, I'd find a good support level and do a limit entry order on it. And then if it ever hits it, great. Then do a limit exit order on it. And then when it hits it, great. But I wouldn't try to follow this.
Okay. So it's a small company. I don't get it. Like this company don't allow the trade options as well as compared to like calls and puts. You can't trade options. You can only buy and sell shares. Like, what's the difference? Why they don't allow? I'm not pretty sure about it. Do you have like any idea?
Well, if you are allowed to trade, I mean, if you are allowed to trade options on this, you could crush the stock pretty easily because it's so cheap.
Okay.
With options, the stock has to be, I mean, it can affect it in a certain sense where it's going to crush it or make it rip exponentially, right?
Okay.
So, and there's a lot of stuff out there that doesn't have options, and for good reason. And for that reason, really, they don't want people to speculate their stock.
sure.
They don't want people to be able to short it, right? I mean, I could short this with shares, but with how volatile it is, people generally aren't going to do that. They're just going to buy shares and sell it at a high. So that's why a lot of companies don't have options, because they don't want that leveraging happening.
Okay, so this company got a warning from Wall Street. Like their share was like less than $1. So like I don't I did a little bit of research. Like they technically the market told them like if your share is not more than $1, then the company is in high risk of like going bankrupt.
No, it's just high risk of getting off of the stock exchange and going to an over the counter.
Yeah. Okay. So
So-
that was my only fear in it, because I'm like really having this company, and
I mean,
I'm
if they get switched to OTC, it shouldn't. I mean, it's obviously going to make the stock fall, but you're not
Mhm.
going to lose money. Directly. It's going to be indirectly through the price of the shares. But if they like hover at like 90 cents, they might do like a reverse split, and
Okay.
that's going to make the stock price go higher. So, but you're going to lose shares at the same time. So reverse splits keep some of these companies in the New York Stock Exchange or whatever exchange that they're in. Reverse splits keep companies in these exchanges so they don't get kicked out.
Okay, but it's not good for the shareholders, right? So
No,
they just
not at
lose
all.
money.
Yeah,
They
not
just
at
lose
all.
the shares.
If something reverse splits or has ever reverse splitted in the past, I wouldn't touch it with a 10-foot pole.
Gotcha. All right, and while you do the shares, I know you made money trading. So do you also look into the dividend ratio? Because you can get like monthly payments, like say $20-$30. Like AT&T is really good, like in dividends, and they say Coca-Cola was really good. McDonald's is some percentage. Do you also like keep in mind dividends, or you just stick to the profits? I want to make like 5% off it, like within 1 month.
So I swing stuff. That's my dividends. I don't care if they pay dividends or not because I don't plan on holding it for that long.
Okay. Oh, okay. So, okay, gotcha.
I create my own dividends.
I know. It's like, that's a better option.
It is, definitely.
So that's all I used to do when I just joined the Discord and started money, like small amount of money on scalping with Tilio, and whatever money I make, like my profit, I invest in the shares, so I don't overtrade on scalping. That's like make me in a discipline, not like over trading, you know. So whatever I make a profit, I directly invest in to the shares, and whatever ticker I like it, I just invest in there. So I don't take the money out, and whatever my cost is, just play with that, and that way I don't even lose that much.
Yeah, I mean, like I said earlier, it's not a bad strategy, you know, flipping scalps, taking the profits and buying shares and going long on the shares and continuously scalping with some of the profits too. I mean, as long as you can grow all of your accounts at the same time, that sounds
Yeah.
like a win-win to me.
Yep. Was like lot of time like strategy to like follow. A lot of figures to remember. All right, thank you, Hostel. I really appreciate it. I'll look into the company more, and we'll see if it keeps on dropping. I'll see if I can like take some equity out of it and put it somewhere else. But I have like now 10 tickers you told me, so I'm gonna look into it from tomorrow morning, and we'll see what I can do. All right, thank you, boss. Really appreciate it.
You're welcome. Who's next? I see some mics going off.
I got a question. I don't know
Okay.
if it's been asked already, but like, did anyone ask like determining like your strike, like what strike to choose from? Did someone already ask that?
It doesn't matter if they did or not.
Okay.
You look based off of open interest. That's probably the most important thing. You got to have a lot of open interest, or AKA liquidity. If you get into a position and there's no open interest, you're not. Well, first of all, it's going to be hard to get into it. But if you do get into it, it's going to be even harder to get out of it. So you want to have
That
a lot of open interest.
that would just mean that you're pretty much like your bid and ask spread are tighter, basically. Correct.
No,
If it has higher open interest, or not necessarily.
not necessarily. I mean, bid ask is basically how many buyers and sellers there are, right? And you can't determine how many there are, but the closer the spread is, the closer that ratio is.
Okay.
But the open interest on the particular strike is pretty important. So with those two, you can pretty much determine if it's a good position to be in. So high open interest with a small spread on the bid ask, that's probably a pretty liquid position to get into with equal amounts of buyers and sellers. So it shouldn't be hard to get in or out.
And do you look at delta and theta as well? I'm sure, right?
No, actually, I don't. It depends on the type of trade you're doing, but I personally don't.
Like if you're swinging something, like if I were to do something, I'm not really a day trader. I would do like something where I would like hold it for like swing it, you know, hold it for a few days or something. So it's like when I look at, for example, like Tesla, for example, like I know a lot of people have made good money off of it and whatnot, but it's like I look at it has a lot of open interest. But then like when I look at like the delta and theta, the theta's like 4 times the delta. You know what I mean?
Well, that probably makes a big difference on implied volatility, really, and where the strike is relative to the current stock price and bid-ask spread and open interest. I mean, a lot of stuff affects the deltas, and the deltas is what creates the contract price. So I try not to get too deep into Greeks because you'll get real confused. And I mean, if you use the Greeks and you understand them very well, then that's terrific. But personally, me, I don't. That's a lot of noise for me, right? So I only really concentrate on open interest, bid-ask spread, implied volatility, and support and resistance if I'm doing options.
And like and also like to determine your strike price, do you just go off of like pick a resistance or support level and like somewhere near around there?
No,
So like,
I mean, I'd pick a direction,
Yeah,
and then
it's like
get as close to at the money as you can based off of open interest, as
okay,
long as you can afford it.
okay,
Now, as far as support or resistance based on the direction you're going, if those are the other end of where you're at, then I'd say, yeah, that's somewhere you'd want to potentially get out of the position,
okay.
or before you get to support or resistance, you want to be out of it.
So like yeah, it's like if a stock reached like an all-time high, right, and then it pulled back, say whatever, like 20% or 10%, would I choose that? Like, and I wanted to do a call. I thought it was going to go up. Like I use it as all my technical analysis, and I thought it was going to go up. Would I pick the strike price near that previous high,
No, you'd pick it at the money
or as close as I can, basically?
based off of open interest.
Okay, that makes sense. Appreciate it.
You're welcome.
Hey, Hostile, I got one for you.
Okay.
This is kind of two things here. One, I don't know why, but for some reason I'm trying to pull up like my charts on TOS, and it's just saying waiting for data and loading forever. Tried logging out, logging back in like 10 times, not working. But that's not really the question. The question is if you absolutely had to play AMD earnings, which is coming up. I heard you mention that you liked it compared to Intel. I think it has potential to rip off earnings, but just wondered what you thought. If you had to play AMD earnings, how would you do it?
What's the date on the earnings?
Let me double check. I believe it's Tuesday. I think it's Tuesday pre-market.
So the
Where
27th.
is it? Oh, sorry, I'm looking. Yeah, it's on Tuesday after close. Yeah.
So I'd probably, and if you're thinking, if you think it's going to go up and you want to be bullish, I'd probably
Right.
go for I'd probably go for the 82.5 or the 85.
And what date?
November 20th.
11/20. Okay.
I wouldn't touch
Fine.
weeklies.
Right.
You know, the liquidity usually isn't there. I mean, the closer you get to today, the more liquidity becomes. But weeklies, I just don't like weeklies personally. I like monthlies. They have the most. And with monthlies, you can see. Um, so like if I'm looking at November 6th, for example, it's kind of spread out, right? You got 1,000, 2,000, 700, 13, 15, 5,000. But if I look at the monthly, 53, and then skip down 23,000, skip down 9,000. You see how it's more centralized as far as the strikes go and open interest. It's not
Right.
as
Yep.
spread out across the whole entire chain.
hmm
So I like that better.
Got
So,
it.
you know, the 53 is probably a good one to get into if you can afford it. The 85 is the second best one. And I mean, I would just again skip down to the ones with the most open interest, really. You know, wherever
Okay.
you can afford it, as long as it's 5% or less on your total account value, that's probably
Right.
decent.
Okay. Awesome. Thanks, man.
You're welcome.
Yo, Hostile, how's it going? I got a quick question.
Pretty good. Go for it.
For example, let's say Snap or anything, it's approaching its all-time highs right now. Should we be expecting a pullback, you think, or you think it'll maybe keep going up?
I think the probabilities, statistically speaking, Snap should be having some kind of pullback.
Right.
I did notice somebody in the chat. I'm not even sure which chat it was, but somebody was talking about Facebook earnings could potentially affect Snap.
Okay.
So, you know, I'm not really sure on that. I haven't been following it, but that's something to look into. And if Facebook does well, maybe Snap goes up more, right?
Yeah.
So there's certain things that affect certain stocks, and I think that's a legitimate one to look into.
Yeah, for sure. Yeah. Yeah, it definitely makes sense. Cool.
Do you have any other questions?
No, I think that's it. I was just kind of maybe thinking maybe I'll pull back, Monday, and I was just seeing your opinion.
I mean, if you wanted to get into that, I would give yourself time. I mean, always, always, always give yourself time, honestly. I mean, it
Yeah.
costs more money, but I'd say December 18th is probably a good strike to do it. Let's see, a $40 strike is probably good to get into if you're looking to do that. 700 open interest. I mean, I like to see at least 500. It looks like there's already 820 people that have exited this position, so it used to be higher. So that tells me that there's still 700 some people left. So that could be a good spot to get into, or like the 37
Yeah, the
strike.
30 mark. Yeah. Yeah, that'd be a good mark. So you think a longer date would be a better option on that, like no weekly or anything?
Absolutely, yeah. I mean, there's no way that it stays up here. There's no way. Now,
Exactly. Yeah.
yeah. So, but here's the thing: if it falls like let's say it does a 50% retracement somewhere down here to like 35,
Yeah.
that would be the time you take profit, right? Because then it could easily turn around and start going back up.
Okay. Okay. Yeah.
But the timing is really crucial, and it's really hard to time. Like trying to time something is extremely hard. It's almost luck, in my opinion.
Yeah.
But if you can catch it right, you'll make a lot. But that's why I would say give yourself time, because it may not work out for the first week, but then it might start showing profit after that.
For sure. Yeah, that makes sense. Cool. All right. Thanks for the great response. Thanks for
You're welcome.
Awesome. Okay. See ya.
All right. Okay. Who else has questions?
For your when you pick your expiration date, like how far out do you like for your swing trades? How far do you typically go out? Does it?
Well, it depends on where the stock's at. It depends on news. It depends on outliers. It depends on certain things that are happening in the market, like COVID, stimulus, elections. But I like giving myself a lot of time. If I can afford it, I'll do the time. I don't like short-term stuff. Unless I know what a stock's going to do, I don't do short-term. The only time I would recommend short-term is if you're going to get it in and out today, no matter what.
Okay.
So you could do like a week contract that has a lot of liquidity. And if you plan on getting in and out today, no matter what happens, go for it. But beyond that, you give yourself a lot of time.
Pretty much the more the better, or the more the merrier.
Yeah.
If you can.
And if it's at an extreme level, like Snap, for example, the statistical probability is on your side, in my opinion. Right? Just looking at the deviation channels, statistically speaking, this thing's got, let's see, it's crossing over the green is less than a 4% chance, crossing over the purple is less than a 1% chance. So it's right around in between those two numbers, so 2.5% chance that it goes higher, basically, based off of this chart, the 30-day. 60 days even less than a 1% chance that it stays up there, right? Same thing with the 180. It's like 2% chance that it goes past the purple. So this is really, really extreme on the upside. Now, it's not to say that it won't keep going, right? But the probabilities mathematically speaking, say that it's going to come back down. Now, if this is anything like Tesla, it's going to shoot those probabilities out of the water.
Yeah.
So we all know that that can happen. And that's like one of those,
Like a bubble, basically.
well, it's an elusive monster. It's the Loch Ness monster is what Tesla is. You never see it. When you do, it's like the talk of the world, right? And Tesla is like, it's one of those things where if you think it's at a high, think again, right? I mean, I've seen it happen
Yeah.
multiple times. And I'm like, damn, there's no way it can keep going up. And then like when it hit $1,000, like, no way it's going higher. It hits 1,400. No way it's going higher. It hits 2,000. I'm like, God almighty. And then
Yeah,
it does
then
a split.
Yeah, then it like went up like another like $600 or something like that, even
Well,
more.
it fell down to
But-
14, and then it did, or I think it was like 13. Announced the stock split, hit 2,100 or something, then
Yeah.
split and went up some more. So, you know,
So I
it
guess
can
there's
happen. Is I guess my point. It can happen,
Yeah.
despite the statistical, mathematical formulas. There are those Loch Ness monsters that go much further than what the math says.
But in general, it's probably like more difficult to try to predict a high or a low.
Absolutely. It's
It's like
easier to
now,
predict
this-
support and
yeah.
resistance compared to a high or a low, like all time, especially all time highs. I mean, there is really no such thing as all time lows except for, inception of the stock, its most recent low. You know what I mean? Like it can only go so low, especially being new. But when it starts hitting highs, it's really hard to predict where those highs are going to end. That's why I don't like trading stuff that hits highs like this. I'll wait for it to start coming back down, and
Then you would look to enter then once it.
well, I'd look for support levels when it starts coming
yeah.
down, and then I'd get in and try to play it up. That for me, or that to me, is like the shakeout. Let it shake out, let it do its thing, let it establish some kind of foothold somewhere, and then I'll play the foothold.
Okay, thank you.
You're welcome. Who else has questions?
Do you mind if I ask more question?
Sure.
So for your like your studies, like you're doing like your standard deviation, support resistance, like there's hundreds of different studies out there,
Yep.
How do you determine like which particular ones to use or which are the most efficient ones to use? Because I've heard of everything. Like I've heard people use like Fibonacci, MACD.
Trial and error.
Like okay.
I mean, it's more along the lines of your strategy and what works best with your strategy. And for my strategy, nothing works except for support and resistance. I used to use MACD. I used to use RSI. I used to use stochastics and Bollinger Bands, and there's a few other ones out there that I've used, and none of them, like, you don't see them on my charts anymore. I've used SMAs. I've used the 20-day, the 50-day, the 200-day, and it just doesn't really flow with my stuff. I've used VWAPs. I've used regression channels. Although I like regression channels, I like the VWAP, but it's specific to scalping. Let's see. I do use Fibonacci.
I've used that one before. It seems to be pretty effective. Yeah.
Yeah, it's not bad. I like Fibonacci. Let's see what Fibonacci shows me here. So like I would use this for a 50% retracement. So at 35.97 is a 50% retracement. Then I would look at price action as it starts falling down. If price action shows me with volume that it's slowing and starting to reverse, then I would trade off this level and catch it as it goes back up. Same thing with, let's see, let me try. So if I draw, I'm trying to remember how I did this. There's a way I drew it so that I could see where its resistance level would be. It should be from the top to the bottom, but it's, there we go. Yeah. So, I mean, I'm not even sure that that's legitimate.
I think
161.
when I've done, I think on the 1 year, 1 day, I would just take it from like the all-time low to the all-time high. I don't know if that's how you do it. So like for this one, for example, I would take it
I
from
could
maybe like
try. I could try. Let's see.
the 789 all the way up to 42.
Let's see. What I'm trying to do is establish. Maybe this works. No, I forgot how I did this, but I was able to draw it so that you could see like the 23 and the 38 above this, so you could see some levels that may be resistance points.
Okay.
I have to look into that. I don't, like I said, I don't really do it because I don't like playing things off of highs, so I don't even bother.
Yeah.
It's just too risky. The chance, like I said, the chances of it keep going are slim. Even if it does, it's going to come back down to its fair market value at some point, and then I'll look to trade it, or at least start paying attention to it again.
And then what do you do if like one study tells you something different than the other? So like your standard deviation tells you like certain support and resistance levels, right? But then like your actual like channels, your
Well,
okay, just draw your horizontal lines. They tell you something different. Like how do you try to trade off of that in that
well,
circumstance?
what I normally do is I'll use my support and resistance lines that I personally draw, and the standard deviation doesn't necessarily tell me that I should or shouldn't get into that position. It just tells me how extreme of a level it is currently. And if the extreme level is it green or purple, that just makes it a home run versus, second base. Right?
Yeah.
So that's really the only thing I use standard deviation for. I mean, I can search, I can do, like I said, I have a scanner for standard deviation to potentially look for things that are at those levels already that are good tickers to get into. But that's if the stuff that I'm following currently is kind of like in the middle range and I can't really get into it, or it's not worth it. And I've got cash sitting around, then I might do it. But I've done that in the past and ended up finding myself in a position where I'm sitting on something for too long because it was something that I kind of just got into because I had money sitting around, and then all these opportunities opened up on stuff that I really wanted to get into, but then my money's tied up on this other trash that I should have waited on, right? So there's that patience factor as well. So the stocks always, always, always are cyclical, and they always move up and down, and it's just a matter of waiting for them to hit their levels, right? I mean, I think the best way to trade shares is to just set limit entry orders, good till canceled, and when they initiate, great. Set additional support levels below that in case it keeps falling, right? So that's how I like to trade, and that's worked pretty well for me in the past, and even up until recently. I mean, I've done that with Moderna. I didn't take profit when I should have. Like I said, I had $300 some profit off of $2,000, but I didn't take it because my profit target is much higher. I should have, because then I could be. I mean, I'm still up. I think like $100, but I could get back in at this level because I still believe that it's going to pump, especially elections, market news as far as the economy, stimulus. I mean, all these things. As soon as those pop off, everything in my portfolio is going up. That's the way what I believe. Because it's beneficial to see all of that happen for the country. So hopefully that answers your question.
That was very helpful. I really appreciate it.
All right, you're welcome.
Thank you.
Okay, who else? VCAV and Brian, you guys in here?
Oh yes, yes sir.
Okay. So I'm gonna go use the bathroom and get some water. You guys, either of you, if you don't mind answering other people's questions until I come back,
Yeah, I'll try my best.
or you guys can just kind of talk freely. Anybody in the channel, whatever. But I'm just gonna step away for a sec. I need to get some water and use the bathroom.
All right, sounds good.
Thanks.
All right, VCAP, yo, that yeah. Just try on IG and you can find me. Anybody got questions or any new traders here?
I'm a new trader. I need help.
Sorry, who was that?
It was me.
Mario, you little shit. What's up, bro? You having a good night?
Yeah, just had dinner with the family.
Oh, right, the Among Us thing.
Oh no, don't worry. You're taking over for Hostel for the meantime. It's all
Yeah,
good.
no worries. Once he's back, I mean, we can start one.
We'll see if people want to join or not.
See, I know Chase probably does. Let me tag him real quick.
Actually, VCAP, now that I have you here.
Yeah.
So you know that algo that you used to use?
Yeah.
Do people know about it? Or am I allowed to talk about it?
I mean, it's just from another Discord thing, pretty much.
Oh, okay. Yeah. Because I know when I was talking to Professor about it, he's like, "Who told you?" And I was like, I felt bad. I was like, "Oh no, not sure if I was supposed to say it."
Only 10 people are the max, right, for a game?
Yeah, 10 people.
All right, so I'll join. Face, Mario, VCAP. Do you want to play?
Yeah, I'll jump in.
Okay, so 4, assuming that Helio's gonna play. 5, Chase will be 6. We need probably 4 more slots.
Hey, bro, what are we playing? What's up?
You want to play Among Us?
Sure, sure.
All right.
Yo, I will wreck some people at Among Us. Let's go.
All right, I know how it works, but like, when you do a task, does it tell you where to go?
If you look at the map, it does. Yo, did our live Q&A just turn into an Among Us Discord?
I guess, man.
Yeah, I was gonna say, guys, don't forget that this is Hostel's Q&A. If anyone has any questions, go ahead and ask Noodle or VCAV. They're both very smart people when it comes to trading.
All right. I have a question. Do you guys just trade for a living, or do you have another job?
Not yet, but that's the goal. Still a work in progress, if that answers your question.
For sure.
I think the only people that trade for a living are Algo Myers, Tilio, Stock Daddy does it trade for a living. There's like a couple guys there that do it for a living, but not all of us yet.
All right, I'm back. Holding it down, Brian, VCAV?
Yeah, we answered so many questions now. Too shy. Mario tricked me. I thought he was a new trader.
Oh, no
I
worries.
didn't do that.
Mario 94, or is it
I
Mario?
did not do that.
Mario.
What up, Hostel?
How's it going?
I just had dinner with the folks, but I'll let you do your thing.
Cool. Okay. Who else has questions?
Actually, I do have a question.
Okay.
You know how since elections are coming up, I'm thinking about just sitting on cash in the meantime. How long would you wait after or post-election to start getting into trades? Like, when are we going to be like, all right, the market made a decision. Clearly it's bullish or clearly it's bearish. Like, how long do you give it? Because I think it's the first time I've ever traded during or after an election.
Well, I think it'll be pretty instant, and if you can get into something at a low right now, consider doing that.
Regardless if it goes down even more?
Well, I don't think it will. I think the election is just gonna. I mean, it's already priced in.
Oh, okay.
Yeah. So I mean, I
Like
think
even if like let's say, you know, because at the end of the day, I don't want this turning into politics, but let's say Biden wins, I know he has a little bit more of a you know, higher tax rate, so some people feel a little bit more like, hey, let's sell off now, but that's already happening, right? Regardless.
well, the thing is, even if he gets into, or even if he wins, you still have to wait till January 20th for him to be inaugurated.
Point.
And then, how long is it gonna? So the other question is, do the Republicans retain control of the House or the Senate? Do they take the House, or you know, whatever the case is? Do the Democrats retain the House and take the Senate? I mean, you know, that makes a big difference. It doesn't necessarily matter who's in the presidency. It also matters about the other branches of government.
That's a good point. Huh, I didn't
And
think of that.
in the same scenario, depending upon who controls what, it's still going to take some time for them to pass laws. So short term, I expect to see the market just move up, I think.
Yeah.
I mean, there are going to be some speculative plays, right? I mean, like EV, I think is going to rip if Biden gets in. But it's all going to be based off of emotion. It's not going to be based off of actual things that are going to happen, right?
Got it. Okay, yeah, because I was thinking about a couple of plays for next week, and I was just really hesitant about it, you know, due to the elections and whatnot.
Yeah, I mean, if you can get into stuff right now that's at lows, I'd say to do it. But also consider what's going to happen if Biden gets in, right? Because we know what's going to happen if Trump stays in. But if you're looking to get into positions, how are those going to be affected if Biden gets in, and factor that into your decision unit.
Yeah, I think the positions that I want anyways are tech, and I don't think Biden really has anything against tech at the moment, besides like the huge conglomerates maybe, but
Well, I mean, tech, no matter what, is going to be one of those industries that they're going to go in I think they're just going to go up no matter what. That's just tech.
Yeah.
So,
Yeah.
and there's nobody out there that's going to be like, no, we want to defund tech. You know, it's not going to happen.
Yeah. I mean, I think they try to break them down a little bit, but that's about it. Like the whole Google and Apple thing going on right now.
Yeah, I think the Democrats are the ones that are trying to do that, right?
I honestly don't even know. All I know is that they're trying to sue Google for monopoly stuff. But at
Yeah,
the
I've
end
seen
of the day,
that,
it's
like
like
Google and Amazon.
we don't
they-
really use any other search engine. Like, let's be honest.
True.
They all suck besides Google.
Yeah, there's no telling. I mean,
Anyways,
I have seen.
yeah, that was my question. Thank you.
Yeah, no problem. I have seen, big tech under threat of being split up, and I thought that was like an AOC Bernie Sanders thing, but I could be wrong.
No, they actually don't really care about stuff like that. They care. I think they're more concerned about like Amazon.
Yeah, Amazon. Yeah, I mean that was one of the ones I was mentioning. Amazon, Google.
Yeah. We'll see, man. We'll see. Politics is finicky.
All right, who else has questions?
Yeah, Hostile, I got one more question for you. I'm new to this Discord thing. I just set an alert for all the alerts. Do I get the alerts even when I'm not on the app?
You're gonna have to, I think, specifically make the channel. So let's say you want to do Tilio scalps, you'd have to go in, go to notification settings, and to do all messages.
Okay, that's good. That's what I just did. And then it'll just like message like an iMessage or something.
Well, no, it'll pop up like a little banner as long as you have your phone set up to see banners and it makes
Yeah.
sounds with the banner. Then yeah, you'll see it.
Oh, okay, cool. Cool.
I can hear you typing, Brian.
Oh, my bad.
Okay, who else has questions? Anybody? Probably going to do this for 20 more minutes and then just open up the floor for random chat. So do please answer or ask questions now. Although I am open to answering questions after 12. I think 12 will be happy hour.
Well, I got no questions, but yeah, thank you again, Hostile. Sorry about typing.
That's all right. I'm
All
just messing with you.
All right. Well, later then, Hostile.
See ya.
Yep. Thanks, Hostile, for answering the questions. People do not want to answer for some reason. We need more questions.
Yeah, no worries.
Yeah.
Most people like to just learn and listen. I think a lot of
Right.
these Q&As create questions for other folks, or like they'll try something out or look into something, then maybe it spawns a question next time or something.
Right, for sure. Yeah, when I was listening, I was actually learning some more stuff, like a ton. So
That's good.
yeah.
Anybody?
Do you trade for a living?
No. I'm in IT. Although I trade my retirement for a living, if that's a thing.
Do you make more money trading or from your job?
No, my job still pays me more money. I mean, but I've got a pretty good paying job, so I mean,
True.
if I were 25 or 30, maybe, or a little bit younger, like around 25, then I'd say, yeah, it totally pays more. But um, my job's, I can't complain. I got a pretty good job, so pays
Do
nicely.
you invest a particular percentage of your paychecks, or do you just have money invested from just over time?
Every year I try to put $12,000 into my Roth accounts. So I try to max that out, and then whatever's left, I'll obviously pay bills and save up some money for some stuff that the wife would want. And every once in a while, I'll throw in a couple grand in my brokerage account and trade that, try to make some money off of that. The ultimate goal is to make enough money in the brokerage account to fund both Roth accounts and my health savings account. So, we're talking $19,000 a year in profits on my brokerage. And at some point, I'll get to that. Right now, I've got about $7,000-8,000 in my brokerage. So, um, my main goal here is to fund my retirement accounts and trade those and create returns off of that. And as I continue to get raises at work and continue to pay off debt, don't take on more debt, and add to my brokerage account. When I get bonuses from work, I'll potentially either pay off debt or put that towards my brokerage. But my wife likes to go on nice vacations sometimes, so it's $3,000 or $4,000 for a vacation. Um, she wants me to get rid of my expensive car and get her an expensive car. So you can imagine how much money I just lost on that. So I guess the real goal is don't take on more debt, add more to your retirement accounts, and at some point you're going to be making enough money to be able to fund your brokerage account on top of your retirement account. And then at some point on top of that, your brokerage account's going to be funding your retirement account. That's the goal. Got to have goals.
Of course. How long have you been trading for, like doing this?
12 years. The first 7 years I lost money. Well, I say that in the option sense. The first 5 years I made money. I made 300% return on 10 grand, and I bought my first house basically with that down payment, that is. And then I started from scratch, and I bought $1,000 worth of Apple, 4 contracts of Apple, made $7,500, thought I was a champ, and then lost it all and kept losing. I ultimately lost probably around $20,000 in options total. Well, that includes futures. I played futures and lost about 5 grand within 2 or 3 days. That wasn't fun. But 5 years ago, I started with $700 and turned it into $36,000 over the next 3 years. And then, actually 4 years. Let's say that, because all prior to COVID. So this year, so I basically went from $700 in 2015 up until February of this year, which was 36,000. I did lose about $2,500. I also lost another 4,000 or 5,000 because of COVID, I think. Let me do the math. I know the percentage. I don't remember the actual number. Yeah, so it was about $5,000 to $6,000 I lost due to COVID. So I was around 40,000 actually, and lost 5 or 6 grand. And then after COVID, I started I started doing like $5,000 positions, $7,000 positions, and I made a decent amount of money. I mean, today I keep fluctuating above and below 60,000. It goes maybe from 56 to 62. Break even is like 58 and a half. The profit targets that I'm looking for will put me at about 62 to 63,000. But I could cash out at 60K. As far as the positions that I'm in, that's where my total would be. So this year really has been an exponential increase in profits, but start with $700 for 5 years. I mean, I didn't contribute at all to my accounts. You know what I'm saying? So I just played it and made money because at the time I'm thinking, tired of losing money. I'm not about to stick 5 grand in here or 6,000 in here and then lose it all again. I'm gonna start with. I think at the time I had gotten it was like the last paycheck for my previous job before I got my new one, which is a lot better, and it was like $700. I think that's what it was. It's like weekly paycheck, maybe. I can't remember, but I know I got $700, put it in a Roth, and I just started trading that 5 years ago, and it's really, it turned into 36K over that time period, and then, like I said, starting in early April until now, I've turned it into 60 from 36, because I got a little risky, but I mean it was shares, so there's only so much risk. I even made about let's see. I opened up another brokerage account with $500 and I got it to $1,500 on spreads only. So I made $1,000 doing that too. I did lose some of it though from testing out new strategies that I thought were gold. They were actually trash. So I lost some money doing that, but whatever. I was playing with profits.
So when you had your moment of I'm tired of losing money and you put that $700 in, did you change your strategy? And like what was that strategy change that you did?
I stopped doing options and I started doing share swinging.
Oh wow.
So I was just losing money doing options. I mean, the very, very first time I did options, I made $7,500, and I was like, I'm a pimp. Then after that, I lost so much money, man. I'm just losing money. So I decided, you know what? I need to stop doing this. It's not working. Keep making the same mistakes over and over and over. It's not working. So I stopped and I started learning, support and resistance really is the key thing that I learned. And then after I learned that, I started making money. Like my first trade, $700 turned into 1,200. I had a couple of positions that were 1,000 that turned into 14. I mean, it's just a lot of that. Like 1,000 turned into 1,250, 1,000 turned into 1,150, 1,000 turned into 14 again. Just constantly doing that. And it was like every other month, every 30 to 60 days, I would see anywhere from $150 to $500 in profit. It was pretty easy, honestly, if you ask me. Like during the regular market, it takes longer. That's all. Like right now, it's so volatile. You could potentially see those same returns within 2 weeks if you get in at the right time. But I got in some of these positions 2 months ago, and the market has been going down. So I've been doing that by averaging down. I liquidated 2 positions out of 10 for profit. So at least I did that, and I could have liquidated 2 more. One of them for like $60, which is not much, but that's off of 250 actually. So that's actually a really good return. And then the other one is $2,000. I could have made 300. So I could have liquidated 2 more positions, and then I'd be about 40% cash, maybe. So yeah.
Aw, thank you for all of that. Very insightful.
You're welcome.
Hey, hostile. Which state do you live in? Like, what do you recommend? Like, keeping in regard of the taxation policy. So I just moved to California, and it's my first year. I'm making some of the gains on the stocks and options. So, what would you recommend on that?
Well, you're gonna pay income tax on that, 100%.
Yeah. So, what I did my research on is like some are the long-term gains, more than 2 years, on less than 2 years, and with the brackets too. But which state would you recommend? Like, is the best? If you have any
Which
advice on that?
state? Um,
Yeah.
the Roth account state.
we discussed that already. Like a lot of it. Here we go.
No, but on all seriousness, I mean, I am serious about that, but kind of joking.
Yeah.
States that are no income tax, right? I mean, Florida, Texas, Wyoming, Tennessee, Montana, I think New Hampshire. There's not too many.
And I believe Nevada as well.
Yep, Nevada's one. Yep, I believe. Matter of fact, let me check.
Yeah.
I think so. I think
Yeah,
it
it
is.
is.
Okay.
Yeah, I'm in California, so that will be like the closest to me.
That's the worst place to be for.
I know. I have no idea when I moved here, and then when I read about it, I didn't know what I'm getting into. But now I'm learning, so trying to switch the state as well. That's why I put a question. Like, if you guys know any better, like the best one to like look into.
Well, how would you switch the state? I mean, you're gonna move again?
Yeah, probably because I like California. I'm on almost like done with it.
Are you just going to school there, or?
Um, um, so right now I'm an online student into the business, so it doesn't really matter where I go. I just do online study,
I see. Well, yeah, I mean,
and I'm
definitely
right now.
choose a state that's. I mean, Texas is probably going to be your best bet as far as getting a job and not paying income tax. And there's a lot of jobs in Texas, especially in the Metroplex in Austin.
Oh, okay.
Um,
And it's
the
pretty cheaper as well as compared to California is the worst when it comes to the houses and renting.
oh yeah,
And
yeah. Yeah,
so
Texas is relatively cheap as far as housing goes. I mean, the tax on the housing is high, but they've got to make up for something, right?
yeah, they gotta.
They don't have tax on food. I'm not sure if it's just grocery food or if it's dining as well, but I do know
Mhm.
groceries. There's a lot of things that you don't pay taxes on. Florida's another pretty good place to no income tax, and some of the areas are pretty good for housing. And there are pretty decent amounts of jobs in Florida. Um, Florida and Texas are probably your best 2 bets. Nevada really there's I think like 85% of the state is federally owned land, so you can't even like there's only just Vegas and the Reno area, maybe Carson City. Those are about the 3 cities that you can live in, unless you're trying to live in bumfuck Egypt in Nevada.
Okay.
Same thing with like Wyoming. There's really not a lot there. Montana, there's not really a lot there.
Yeah, it's like,
Tennessee is kind of 50-50 maybe. You could probably get a job in Nashville or one of the other cities. I'm not even really sure how many other. what other cities are worth living in Tennessee. I don't even know if Nashville's worth it, to be honest. I haven't looked into Tennessee personally, but you could also look into states that have low income tax or low taxation period. Like I think Arizona and Arkansas are pretty decent in taxation.
Okay.
Oklahoma, but I mean, Oklahoma's probably not very great as far as jobs. So you kind of want to like, keep in mind where the jobs are. That's probably the main thing because without
man.
jobs, you don't get income. Without income, you can't
Yeah,
trade.
can trade.
California has a lot of jobs.
What about Washington hostile?
Washington State.
Yeah.
Well, Seattle's pretty left leaning and high taxation. And I think the major cities are the ones that really create the laws in Washington. I don't live there, never really looked into living there. I'm not really interested in living there, so I can't really comment on it. You could ask Jet. Jet lives in Washington, I think. He could tell you more about the state.
He I live doesn't in
live in
Washington.
Seattle, though.
I actually know Jet. He lives in the same city as me, and I live in Washington too. So, what questions do you have about it? Sorry, I wasn't paying attention for a second.
I was asking about taxes in Washington.
Taxation.
Oh, so there's no income tax.
Oh, really?
I mean, yeah, but there is a tax on like when you buy stuff, buy a house, buy literally anything, and also when you sell stuff as well, you have to pay taxes on all of that.
Well, that's pretty much every state, I think. I don't know of any states that don't have that kind of tax.
Oregon doesn't.
So
Oregon?
for that, in Washington, you won't be paying taxes on trading, like on stocks.
I think the tax is just under 9% on the trading for some reason, but that's about it.
That's awesome.
So the taxes will be on the top of the list, right? If you should consider something.
I mean, it depends, right? I think taxation and jobs are pretty equal as far as where to live, right?
Yeah.
Because it's some of it could be a wash, some of it could be a benefit or a detriment. So you have to depend on. I mean, really should look where are the jobs that you think you're going to be in, and then look at the taxation for all those places and find out what the cost of living is and that kind of thing.
Hostile, do you know about Massachusetts?
Massachusetts, I think it's pretty high in everything, isn't it? Yeah, I think Massachusetts is pretty high in everything. And my cousin used to live there. She moved to New Hampshire, and so she works in Massachusetts but lives in New Hampshire. So, and she said she moved because of taxation. It was just really expensive.
You think it's higher than New York?
The New York?
You can't even touch it.
I don't even know. Like New York's pretty high. Like California, New York, and Hawaii are crazy high compared to pretty much.
California, is like they have taxation on everything you talk about.
The only other thing though about Washington that you guys need to consider, or you need to consider though, is living is fucking expensive. Literally, a house here in Washington could cost $375,000 or something, and it'll be like a 2-bed, 1-bath. And then you can get a house in Texas that's literally a mansion for that price. And also, like, even gas is like $4 a gallon for regular. So it's everything's just fucking expensive.
Don't they tax people with electric vehicles up there too?
So yes, I don't know exactly how it works, but I believe they're starting to implement a tax by the mile kind of thing.
Yeah, I saw that.
Where you have to report your miles, and then they tax you at the end of the year for it, which is fucking ridiculous.
Right, let's save the world, but we're gonna tax your ass for it.
Literally, I don't know. It's fucking bullshit. Yeah, and also when you buy a car too, you get taxed when you first buy the car, and then also they tax you when you go and
Renew the
register the
registration.
car. Yep. And they tax it off of the Kelley Blue Book value, which is always, and they do the highest value possible.
Right.
So say if you buy a used car for say 10 grand, they'll Kelley Blue Book it at $25,000 and force you to pay $2,500 on tax on it.
Yeah, same here in North Carolina, man. It's exactly the same. You pay tax on the car when you buy it, and you pay tax on the registration renewal. And it's like, if it's a new car and you live in a new property that's newly built, like for example, me, if I register where I live, the tax on my Q50 is like $700. But if I register it where my mom lives, it's like 200. It's insane of how much more they tax me because of where I live, and what city I'm in, for example. So, we get the same thing, and they even charge you, um, when you do the emissions testing, they charge you for the sticker or the test itself. And they used to not charge for window tint, and now they charge for that too. So it's like, even if it's legal, you get charged. If it's illegal, you get a ticket, charged, and fined. So it's just
Definitely.
it's insane.